Okay, come back, guys. So some of you will ask that why do I do the modification if it's on awareness level? Okay, but part of the reasons why I did this thing, it's because there is this amendment to IFRS 16 that is related to COVID-19 issues. Okay. So this amendment talks to the modification of leases. Okay, so you need to understand what a modification is, how is it accounted. Okay, and then after you understand that thing, you need to move on now to understand the amendments to IFRS 16 because of COVID-19. Okay, so here it says is that IFRS 16 has been amended to provide the requirement or to provide the requirement to determine whether COVID-19 related concession is the lease modification. So during COVID-19, what is happening is that more especially in the airline industry, okay, what is happening is this: lessees are not making money and they don't have money, okay, yet they still have to pay the lessors the lease payments, okay. So now what is happening is they are getting into agreements with the lessors, okay, and those agreements, they say that it's either they decrease the lease payments. Let's say if you were paying 20,000 before COVID-19, now you're gonna pay 10,000 of lease payments, okay, or you're gonna suspend the payments for a certain period of time up until you start making revenues again and you are financially healthy, and then you start paying the lessor again. So currently those agreements are in place between the lessors and the lessees, okay. So from the modification, you know that if we said a modification actually is, here's this thing. So I need you to see the link, okay. So we said a lease modification is a change either in the scope of the lease or change in the consideration of the lease. That is a lease modification, okay. So now I'm saying to you, the standard says, okay, the lessee does not have money because of COVID-19. They are not generating revenues, okay. So they either get into an agreement with the lessor to decrease the lease payments or to suspend the lease payments up until they generate revenues again, okay. So normal circumstances, what happens if there is a change in consideration? Lease modification comes in, and then you apply the lease modification, okay. So what ISP said is that, okay, for lessees that have the change in the lease payments, and those change in lease payments as a result from the COVID-19, okay. So we're gonna give them exemption, and the exemption is gonna say that you are not going to apply the lease modification because it's onerous, okay. It's very complicated, okay. So we're not gonna put you under that pressure. We're not gonna put you in that position to have to apply the lease modification. So what's gonna happen is this: you're gonna be exempted from applying the lease modification. Instead, you're gonna account for those payments as variable lease payments, okay. So before you apply that exemption, there is a certain criteria that you need to meet, okay, and this is the criteria. The rent concession, or which is a decrease in the rent that you pay to your lessor, should occur as a direct consequence of COVID-19 pandemic. That's number one. Number two, the change in the lease payments should result in the revised consideration for the lease payment that is substantially the same or less than the consideration immediately before the change. So if you were paying 20,000 before, now the change should put you to 18,000 or 17,000 or 15,000, should not put you to 22,000. It doesn't make sense, okay. So the change should be result to lower payments, and again, the reduction of lease payments affect only payments that were originally due on or before 30 June 2021, Okay, for a payment that was due on July 2021, it's not accounted for in this amendment. Okay, so there shouldn't be other substantive changes to other terms and conditions of the lease. So there should only be that change. Okay, so don't now go and change other terms of the lease. Now you are using it. Okay, so the change should only be in the lease payments. Okay, and the lessee should elect. Actually, this is an option. So you can meet the criteria and choose not to apply the practical expedient, or choose to apply the practical expedient. So if you meet these conditions, this is what this thing means. Actually, it's that the payments changed under normal accounting before COVID-19. If the payments change, list modification. Okay, you apply list modifications. But now because of COVID-19, if the payments changes because of COVID-19, now ISP says to you, okay, we are giving you an exemption. Okay, do not apply the list modifications because it is onerous. Okay, instead apply the practical expedient, and that practical expedient says that the rent concessions should be accounted for as a variable payments. Okay, so I won't go deeper on this COVID-19 related issues, but I want you to know that there is that amendment of IFRS 16, and it goes up until 30 June 2021. So if you are writing CTA on 2020, you are writing ITC on January 2021 or ITC on December 2020, this thing is applicable to you. And we all know how SICA is. They like to test things that are a topic. Okay, the things that are very popular at that stage. Okay, they test what is happening currently. So if you are going to CTA 2020 or ITC 2020, you need to know a lot about this amendment because it's coming, darling. I'm telling you. Okay, so if you guys need a video specific to the amendment of IFRS 16, just drop a comment and tell me that, okay, also can you please do another video about this amendment? Can you also provide the examples that are happening in this amendment? And then I'll be happy to do that for you. So now I just wanted to highlight it to you. Okay, thank you. So now let's go to the nice part of IFRS 16. Nice part, the part that I enjoyed the most about IFRS 16. Deferred tax implications. Okay, so this is what is happening. Deferred tax implications. What happens is this: for normal tax purposes, okay, for normal tax purposes, SARS does not recognize the leased asset. Okay, instead, the lease rentals paid are allowed as a deduction for tax purposes. You know, what this means is that you are a lessee, you are leasing an asset, and as part of your accounting, you have your interest expense, you have your depreciation for the right of use asset. Okay, so if SARS does not recognize that lease, it means that depreciation and that interest expense, they are non-deductible for normal tax purposes. If they are non-deductible, you need to add them back when you calculate your temporal differences to calculate your deferred tax. So what SARS allows as a deduction is actually the lease payments that you make. So as the lover of the income method, when I calculate the deferred tax related to this thing, I don't bother going to the balances. What you need to do, you need to add back the depreciation for the ROA, you need to add back the interest expense for the lease liability, and then deduct the lease payments that we are making, and then it's done. Okay, that's if you are using the income method. But if you want to use the balance sheet method, suit yourself, go use the balance sheet method. I don't know the balance sheet method and I don't like it. Okay, so let's talk about the VAT implications of the leasing. This is very important also. So when you talk about the VAT implications of the lessee, it is very important. It is very important, okay, to distinguish between leases that meet the criteria to be accounted for as an installment credit agreement in terms of VAT legislation, okay, and the ones that do not meet the installment credit agreement term, okay. So if as per VAT legislation, the lease meets the criteria to be accounted for as an installment credit agreement, then you need to account for it in that way. And if it does not, you need to account for it in that way. Okay. So now let's say we have leases that do not meet the criteria to be accounted for as an installment sale credit agreement. Okay. Here what is happening is that the VAT is levied on each and every lease payment made by the lessee. Okay, therefore, the lease liability should exclude VAT. This is very important. Lease liability should exclude VAT. Okay, and the lease payments by the lessee. The VAT is levied on each and every lease payment made by the lessee. Okay, so all lease financial statement line items are not affected by VAT in this case. Okay, on payment of the lease or on of lease payments, this is what you need to process. Okay, so you are paying your lease payment, and that lease payment includes VAT. Okay, so you credit bank, obvious bank, it's the payment including VAT, and then you debit your lease liability because you are decreasing the lease liability with the payment excluding VAT, and then the difference obviously it's the VAT, so it goes to the VAT account. Okay, so what this means is that when you calculate your lease liability, your lease payments, which is your PMT, should exclude VAT. If the PMT excludes VAT, obviously the lease liability also excludes VAT. Okay, so this one is very simple and it doesn't come often in the exams, but you need to know it. It's very simple. It's you account for it as I say. There is nothing else. There's nothing complicated or anything about it. Okay, but here the problem is now when it meets the criteria to be accounted for as an installment credit agreement. Okay, so here what's happening is that in this case the lease is treated much the same as purchase of an asset. Okay, so the lessee receives a VAT input credit because the lessee here is the one who is paying or is the one who's acquiring an asset. So the lessee receives a VAT input credit at the earlier of date of delivery or the date of payment. So at the day where you receive your asset that you're gonna use, or the earlier that you pay for it, okay, it's where you account or you get the VAT input credit. Okay, the input deduction on VAT for that asset, you get it on that day, all of it. Okay, so now what this means is that the lease payments that you are making each and every year, they include VAT. What also this means is that your lease liability at the end of the day, it includes VAT. Okay, but the right of use asset excludes VAT. That is very important. So if your payments include VAT and your right of use asset, and your lease liability also includes VAT. Now let's come to deferred tax. Let's link VAT to deferred tax now. So we said deferred tax, we add back the depreciation, we add back the interest, and then we subtract the deduction of lease payments. But now in this case, those lease payments, they include VAT. Okay, but VAT is not deductible. Okay, so if VAT is not deductible, it means on those lease payments we need to exclude the portion of the VAT. But that portion of the VAT, we actually do not know the exact amount of it. Okay, but what we do know, it's a notional VAT part. So in this case, what you need to know is that a notional VAT input is actually equals to the lease payment that you are making at that time, divided by the total lease payments to be made under the lease, which means if you have a 5-year lease, one payment times 5, that's the total lease payments. Okay, then the lease payments one payment, and then you multiply by the input VAT. Okay, the input VAT, it's the one that was claimed by the lessee at the beginning of the lease term, at the beginning of the lease. Okay, so you know it. Okay, so that is the input VAT. So the amount, the notional input VAT that you're gonna get in here, you need to say that notional VAT, that notional, okay, you need to say your lease payments, your lease payments minus the notional input VAT. Okay, that equals to the allowable deduction, the income tax. Okay, that is the allowable deduction per income tax. This is what this means. Okay, so now on your income method, when you are doing the deferred tax, what you're gonna do is, now we are looking VAT with the deferred tax. You are adding back the depreciation of an ROA. You add back the interest expense of the lease liability. You subtract the lease payments. Okay, and then you add back the notional input VAT. Okay, or if you don't add that back, you can just say lease payments, subtract the notional VAT, and then you go subtract the allowable income tax deduction, which is a lease payment excluding the notional VAT. Okay, so I think there is an example, or there's a question that we're gonna do that talks to VAT actually. Okay, so I think for now let's stop here and go do equation on leases. So yeah, let's just go to equation on leases, or on lessee, and then that's it for the day. Okay, so wait for part 4, part 3, I'm not sure, but let's do the equation now.